Hi, Forex Fortune Hunters, Tom Wilmot again. Welcome back. Today, we're going to teach you how to examine the different time frames for trading, from 1-minute scalps all the way up to an hour or 4-hour chart. So hold on to your hats and let's get started. Hey guys, it's pretty hard when you're a beginner, especially when you're a beginner, to decide whether to take the risk on a longer time frame chart. It takes time for the trade to develop. You lose your patience. You can become anxious about your stop loss levels. It gives you a chance to really think about all the bad things you could do. And so a lot of folks focus on that 1 or 5-minute chart, and a lot of our previous videos have focused on that as well, because the risk is reduced, and yet there's so much chop that can occur on a 1 or a 5-minute chart that maybe we want to stretch out our imagination here a little bit and take a look at this whole Brexit thing from the point of view of a longer time frame. In this particular chart that you see on the screen right now, you can see that this is last week. I'm recording this on Saturday, the 23rd of March, 2019, in the middle of all these Brexit negotiations. And in fact, what happened was that after losing the vote, Prime Minister May went back to the European Union and begged and pleaded for an extension on Brexit. Her request really fell on deaf ears. She got very bad reviews. And so what happened after she got back from England was we had this dramatic drop on Wednesday and Thursday of this past week in the pound yen. Now, if you'd been involved in this trade with a significant position, you could have taken the rest of the month off, or the rest of the quarter off, or the rest of the year off, depending upon your contract size. But in any event, let's kind of take a look at how this maps against our trend magic and our chandelier stop that we put together and called the double whammy. And then in the recent video, 2 recent videos, I talked about how to trade the session times and also how we could add that Zeelander Flytrap signal line. Now, for those of you who've never heard of Zeelander, that was a book that I wrote about 3 years ago now, amazingly enough. It's on Amazon Kindle, called The Amazing Zeelander Flytrap Forex Trading System. It's worth a read at $3.99. And if you like it, please send, give a review, an honest review of what you thought. But in any event, that's a separate deal. In that book, we came up with 2 strategies for you. The second of which had what was called a Zeelander Signal Line. And basically that had to do with moving averages and crossovers and waiting for a confirmation of the trend. If you're interested in more on that, for sure, there are a whole bunch of videos on a video list in YouTube related to the second strategy, as well as one I posted just a week ago to refresh your memory. So we'll skip on now and not talk about that. What I'm going to do is simply add that new template that I created to the chart that you see on the wall. We have double whammy basic and double whammy this and double whammy that. So let's go here and see what's going on with this particular one right here. And this has on it our Ichimoku cloud. Let's not worry about that. Let's take that baby off of there. We'll come to indicator list. We'll go to the Ichimoku cloud and we'll simply delete that for the time being. And you can see here we do have the cross on and we have a number of our signal lines here. We'll close that down and let's take a look now instead at our indicator that has the signal line. And what we're going to do right away though is come over here to View, to Navigator. And then we drop down all the way here because we have a number of indicators and they kind of drop off the screen for you. So we're going to grab Wilmot Signals and bring that up here and add it to our line. This gives the width of the arrows, and I'll take that down just a little bit to show you how this works. And for any of these indicators, if you shoot me an email, I'll put them in my Dropbox account so that you're not missing them. We have white, smoke, and orange, so I think we're good to go. So let's add that in. Now we're going to come back to this one, and we can see now that we've got a downward, a spiraling price curve. Here we have an uptick. Here is an uptick here, and we can see what we talked about the last time, that what we had was this optimism going into the weekend, Wednesday and Thursday of the previous week, that May was going to get the extension and so on and so forth. Then we came back down and we just crashed. Now what I've done is to put on here a 1-hour chart. And what I'd like you to notice with our signal line is, number one, we have 2 red lines, which means we're in a downtrend. We have an orange grid and an orange signal line. Clearly means that once we broached it and driven our 12 EMA down below it, we get this arrow, and we know then that we're really in a downtrend. We also have our RSI down below the 45.55. So if you want to take a long trade in this environment, I suggest you get counseling, because that is a very bad idea. This is a downtrend, and what you want to do is wait each time for the pullback. Now, we have pullback into the bands. Here was a pullback on the 1-hour chart up here into our yellow line, which is the 12 EMA, dropping down dramatically. We also pulled back and we touched against our trend magic line here. Notice on the 1-hour chart how precise this actually is also. 1 hour, talking at the beginning of this day, which was Monday, Tuesday, Wednesday, Thursday, a pullback exactly to the 12 EMA and the trend magic, with 0 opportunity to come up and take us out of the trade, either by crossing over the 24 EMA, which could be a stop for you, or the chandelier, whichever one you prefer. Likewise, again here later on Thursday, we had this particular situation. As we came into Friday, this was less of a trade opportunity. Notice here that we never changed to go back up and create a white signal line, so there's no trade yet. Notice also we drop down, and we're in between these two. We have a red and a white. So in terms of a 1-hour chart, what it's telling us is no trading, please. No trade. This is a neutral zone. It's an area where you can see most of Friday we simply spent doing a balancing act on the trade, and price bounced back and forth. Now what will happen on Monday and Sunday night, who knows, as we move into next week. Notice also that there's a reasonably limited amount of activity on a Monday. Tuesday was very flat as we waited to see what would happen with the extension, and it wasn't until the news broke that we got the real dramatic down drop. Now the next thing I'd like to show you is that what I like to do also is to drill down a time frame when I get a signal. Here's my signal right here. Let's open that up actually a little bit. We're going to do this. And here we are. This is a little easier for you to see. Here's our signal line running across the top, our trend magic line, our chandelier. Now we are going to wait after we get this for the pullback. Now this is clear enough. You can see this. You're watching on a 1-hour chart. There's plenty of time to make up your mind what's happening here. This is not something you need instant replay for. But bottom line is also, what I like to do is create a line like this one. This, and let's even make that bigger so that you can see it. We'll make it a little bigger. We'll widen it up here a bit. Now we've got our situation where this is the line where at the beginning of the next candle, after we've had the confirmation that the 12 EMA has dropped below our signal line, that's the time when we want to maybe drop down a time frame or two. We now know that the higher time frame is with us on the downtrend, so let's drop down to a 30-minute chart and see what happens. Here's our yellow line again. Notice how beautifully this comes back up into the bands, fails. This one here is one. Here's another fail if you want to look at your candlestick formations. In any event, what we've got now on the 30-minute chart is we've got this pullback here, and I wouldn't give it much more than this. Now that's a 40 pip uptick here to your stop, and it could be devastating. But the nice part about Forex, and we haven't talked about this, is you can drop down your contract size. You can go down as low as 10 cents a pip. So if you had a 30, even a 40 pip stop loss that puts you here above the 24 EMA, quite frankly, you could make that at 10 cents a pip. You could have a $40 loss. Big deal. On a small account even, that's 4%, which is if you have a $500 or $1,000 account working just for practice, you've got a $40 issue. That's about 8% of your account, but it's not going to devastatingly wipe you out, okay? And compare that now to the downdraft that occurs, and you can see with the confidence of 4 indicators, 1, 2, 3, the downward facing bands, the issue of being below here. Notice that what we've also got here is a pullback right between the 45 and 55. So all of the issues are coming together in this particular zone right here. And let's see what we can do to find a shape to put on there, just so we can be certain. This is the place right here that we want to be careful for our trade location. Okay, here we are right here. That's the zone. Now basically what happens after you enter that trade, you have to realize that these are 30-minute charts now, 30-minute charts. So you're not going to get a lot going on maybe until 2-3 hours. This drop took 3 hours. You can't wait 5 minutes and get nervous. So if you're going to move up to these time frames, you're going to get a bigger move, but you're also going to have to be more patient. So here we had 40 up to the upside, and down we go. We had 105 pips. So we clearly had a significant move to the downside here. We had a pullback into the bands the next day. On the 30-minute chart, I would let this one go, wait till it drops below the trend magic again, comes back and tests it, fails, and sure enough, off we go to the downside with another 96 on Thursday of that week, and even continuing past that as the pound basically hit its bottom for the last several years based upon pessimism that there was going to be anything but a hard exit from Brexit. Okay, now quickly what we're going to do is quickly move over to the Euro GBP, trading Euro against the GBP. Let's just quickly check and see how we do on this one as well, and you should experiment with this once you get your indicators in place. We're going to put in our double whammy, and actually I thought I'd save that, and I had, so let me see what the heck happened here. What we're going to do now is we're going to close this down a bit more. Now what I'd like to do here is to save this one so we don't have to change all those colors again. Let's see what we got going on. Oh, we just lost it again, so I'm very sorry. I goofed on that. Let's try our Euro GBP, and let's put in our double whammy. And what we're going to do now is see about changing this around a little bit. And we're going to do the same thing we did before, which is to take a look at our indicators and get rid of the Ichimoku cloud. Now that it isn't a good deal, but it's just a different kind of approach to things. And now what we'd like to do is to insert a view, navigator, good review anyway, Wilmot signals, drag it over. Here we go. We're going to take those, make those arrows a little smaller here. Just good review for you, white, smoke, and orange. So let's go with that and see what happens. Now we'll see that in this particular case, we come up here to get over to our left margin. And now we see here the hour-long chart. And you can see Sunday night with our double band here. Monday, a nice move to the north. And why? Because the euro now is going mad because it's the opposite of the pound. I mean, if the pound is losing ground on this deal, then the euro is probably going to gain some strength. And notice, however, that as we moved into Friday, that awful report on European German manufacturing really crushed everything. But in the middle of the week, once again, we had Wednesday and Thursday after the deal was set with an extension to April, the middle of April. Here was a perfect view, again, of our trend magic. A drop down into this area, which was terrific. Let's open it up just a little bit here. Notice that we're getting very close. We pull back into the bands for sure, but we also are using our trend magic to help us. Chandelier crossover here. Here we go, up and up and up. And even if you started with this first pullback after the changeover in the trend magic versus the chandelier, we had a 67 pip move first thing Tuesday. Let's see, so Wednesday morning, then a pullback into the bands during the U.S. session, and another move higher, 75 pips, and another move from here up into this area. Once again, notice it's the weekend, so I can't show you what the spreads are, but the spread on the Euro GBP is 2.5 pips, maybe something of that sort. We had only a 17 pip downward draft here, so you have 17 versus 87, which is a nice 3 or 4 to 1 risk to reward ratio. Same thing over here. This was just such a downdraft after that manufacturing report. That's a very difficult one to catch. At that point, when it's getting away from you like this, it's really important we drop down and even to the 15 and even to the 5, and then we're going to move over here and we're going to say, let's take a look at it. We've got this as the move here in this 5-minute chart. This was the London open, pull back into the bands, push downward, 7 a.m. Boston time on Friday, pull back and down we go, and a continuation of the trend after the New York Stock Exchange opens, and only a small pullback as people are getting out and getting ready for the weekend. Okay, guys, I hope that helps. If you like these videos, please subscribe. Leave us a comment if you'd like a separate pair investigated. We'll be happy to try to do it. Please like the videos, give us a comment, and don't forget to check out fxfortunehunter.com, where we have video sliders that'll show how we built all of these templates one video at a time. Thanks again for watching. See you next time.